An interesting launch, and let's get the management to try and talk about this particular piece and what would it mean and what's the rationale behind this. Rishi Nathany, Chief Business Officer at MCX Johnson. Rishi, good having you. Thanks so much for joining in at the outset. Happy New Samvat. What prompted this?
Well, thank you for having me here. We already had a few indices on commodities, and SEBI had taken out guidelines for allowing options on commodity indices, and this is our first step in that direction. So given that there is quite good traction in bullion contracts as of now, I think this is an apt time to launch the bullion index. This index gives investors the choice to invest in a basket of bullion, basically both gold and silver, at one shot at a very affordable in a very affordable way. So if you understand that the underlying is 1 kg of gold and 30 kgs of silver, which makes it quite a large size, but this option contract, the notional value would be roughly 8.5 to 9 lakh rupees at present.
Okay, I want to understand the rationale, Mr. Nathany, for one more index, because you already have instruments that are currently there on silver and gold. Is this coming from heightened interest, looking at the kind of volatility in silver and gold prices?
So at present, we have individual futures and options on gold as well as silver. So in gold, we have 4 contracts, 1 gram, 5 contracts, in fact, 1 gram, 8 grams, 10 grams, 100 grams, and 1 kg. In silver, we have 1 kg, 5 kgs, and 30 kgs. However, in futures, these are. And however, we did not have any index on any commodity which is traded, and right now this is the first step in that direction by launching an index of both gold and silver put together.
Who is this targeted at? Is this going to have more institutional players coming in, more retail participants? Is this an option for retail participants who want to participate in the gold and silver movement, which has been quite dramatic this entire year actually?
So it is targeted at all types of market participants, whether you're a hedger, whether you're an institutional participant or an investor, because this allows someone to invest at one shot in both gold and silver without having to worry about which one to invest in. Also, the margin outlay would be much lower in case you're writing, or the premium outlay would be lower if you're buying. So in that sense, it makes a very affordable entry into bullion and gives you a basket of the bullion to invest in.
Okay. Now, I'm just wondering, Mr. Nathany, looking at the fact that a lot of mutual funds also stopped fresh input into their ETFs, the volatility in the prices, you've seen silver prices crash nearly in double digits since their highs. How are you going to ensure transparent price discovery, and how do you see those risks?
So the price discovery on MCX has always been transparent. In fact, MCX is the price benchmark for bullion in the country. Most of the physical trade is benchmarked to MCX prices. And since we have a very liquid both gold and silver contracts trading, the price of which is very well established in India. So this index will be taking its price from the underlying 1 kg gold contract and the 30 kg silver contract. So in terms of robustness of pricing, I believe it is absolutely there.
Okay. And these are all going to be cash settlements?
Yes. So our gold and silver contracts at present are, the futures contracts are cash settled. The options contracts devolve into futures and then are the futures contracts are delivery settled, and the options contracts devolve into futures and then are delivery settled. But this index is cash settled. So one could take an exposure to the index without having to get into delivery.
And what is the advantage of this new index of yours versus what is already there for anyone who wants to invest? If you can address them and just explain what the advantage is. Why should they look at this as an investment option?
So first of all, the biggest advantage is simplicity, because it gives you a view on overall bullion. Second is that to manage your volatility, it helps you manage volatility in a very holistic manner. Third is that the ticket size is much smaller. So getting an exposure to 1 kg gold today would entail roughly 1.25 crores, and 30 kg silver would be another maybe 50 lakhs or 45 lakhs. So that's a huge outlay, right? But here you're getting that the same 1 kg pricing and 30 kg silver pricing at an exposure of 8.5, 9 lakhs. Then with options, you can always have a limited downside while having an unlimited upside once you buy the options. So in that sense, it is simpler with lower margins, smaller contract size, cash settled, and there will be no devolvement into futures. There'll be no delivery. So for people who want a price hedge, who do not want to get into delivery, this would be an ideal contract.
Okay, thank you so much, Rishi Nathany, there, Chief Business Officer of MCX, on a new instrument to hedge gold and silver. I thought this was interesting, Neeraj, looking at the extent of volatility.